What are we going to see in terms of rate differentials, and how does that affect where your preference is going to be for fixed income?
It's actually, I did a lot of work yesterday looking at if you bought US Treasuries as a euro investor, and the 10-year yield in the US in euro terms is exactly the same as Germany, which is a surprise, and it's really all about how the currencies have moved. And I think that means, you know, it still looks actually quite expensive. Even at this 237 level, I'd be getting back into yields in 260, 270, and probably 70, 80 or 90 in Europe. Very little value down here in government bond markets. And, of course, in credit markets, it's not straightforward trying to find value there either. A tough year, 2018, I suspect.
So how long will investors have to wait for those richer yields to 60 to 70, you think, Luke?
I'd love to be able to have a very clear crystal ball exactly when that's going to happen. I have a sneaking suspicion we get this tax bill through in the US. Actually, equity markets move on again. People start thinking about the growth that comes with it, and that could lead to slightly higher yields. Certainly, I don't think we're fully priced in for those 3 hikes in the US next year, and certainly not priced for one more hike in the UK next year. So maybe that's a Q1 story. As that growth story returns, the inflation story starts coming back to the fore a little bit, and yields hopefully pop up.
What are you modelling in terms of growth? I mean, you say, you know, when the growth story picks up, but what, all 0.2 percentage points of it? Or the maximum I've seen is 0.8 percentage points, and that was a very generous study.
Yeah, so I guess 0.4, 0.5, but as always, the market's going to be really trading on the momentum and the feel around the economy, rather than just the pure numbers, which tend to be so backward-looking. I think if we get this tax bill through, the equity markets past the Christmas lull can start moving forward again, and that could just push people's expectations a little higher. The economic surprise indices, you're right, are still quite high in the US and UK and Europe, but I think there's just a little room there for people's inflation expectations to actually rise a little bit as well with that growth, which should push that 10-year number up.